Hey guys, welcome to this event for Realtors. Finally putting into play what ADUs mean for you and why you should encourage people to build ADUs. There is a new law, AB 1033, which has passed through the Assembly, is on its way to Senate, and is expected to pass and be signed by the governor. And many realtors have asked, what do ADUs mean to my business? It doesn't get me anything. And this is going to answer that question of how ADUs fit into your real estate strategy, and particularly listings as well as buying. So AB 1099 will allow families to not just lot split, which we know that SB 9 allows you to split the lots and sell off the lots. But splitting lots is very complicated. And so, and what happens if an ADU is attached to the primary home, as in a garage conversion? AB 1033 solves this problem by allowing families who've built multiple units to not only split the lot if they choose, but to also create a condo map of the property and sell the units off as individual condos. You can still control all of the land, and so the property taxes on all of the land, which is the most expensive part, do not go up, but it allows the homeowners to sell off these units rather than deal with renters. And as we see increasing rent control, that might be a very appealing option for people who want to finally put their house to work for them instead of constantly working for your house. So how does this all work? So first of all, what you need to know is that the new laws, and there have been many new housing laws, now allow owner-occupied single-family homes, and we believe with some additional legislation, also rental properties. But owner-occupied homes today may add a second house, which we call an SB 9 unit, and two ADUs. The first ADU has to be a junior ADU, but there is other legislation passing that no longer requires owner occupancy when you have a junior ADU. The second full-size ADU may be up to 1,200 square feet, depending on local regulations. More often, it's about an 800 square feet, two-bedroom unit, and it may be detached. The real difference between an SB 9 unit and an ADU is an SB 9 unit is a house. It's a minimum size of 800 square feet, whereas the maximum size of an ADU is 1,200 square feet, and more often they end up at 800 square feet. They also have to have separate utilities, etc. So if you're building to condotize the ADUs, you definitely want to have separate utilities, do the metering, and so on and so forth. So that's really important. Now, these might not all be new additions. This slide compares an existing neighborhood to what could ultimately become multiple options for units. In this example, this person has done an SB 9 split, and you've got a primary house and an ADU, and another primary house and an ADU. But let's say they don't split the lot. You can still do 4 units. You could zone this is a primary house, this is an SB 9 unit, this is an ADU, and this is an ADU. It looks and feels like the same product, but in fact, it's just the labeling on the zones. So in this example, and what a lot of people are doing is carving up space, existing space in their houses. Maybe you don't need that huge master bedroom, or maybe that would make for a great 1-bedroom ADU or studio. Or more likely, you don't need that formal dining room and living room. You can split that off and turn that into a separate unit. And then you can also add units in the back as you want. So lots of ways to skin this cat, but you can add multiple units onto these single family zoned properties. What does an ADU cost? Well, I can tell you right now, the average cost of buying a house is around $800 to $1,000 per square foot. Building an ADU is typically about $300 per square foot. The smaller the size, the higher the cost per square foot. The bigger the size, the lower cost per square foot, but gives you some general numbers. The attached units, like a garage conversion, typically see about $100,000. That's nothing. Where can you buy a custom built, brand new one bedroom, single family home or condo for $100,000, right? This is your new pipeline of affordable or attainable housing. Um, a detached garage, typically you end up knocking down and rebuilding. In Southern California, we see costs as low as $175,000 for a baseline price. In the Bay Area, labor's much more costly, so $250,000. But still, look at these prices and look at the rental income. Where can you buy a one bedroom, even two bedroom, $250,000 custom built unit? So this is what I typically see. Usually the detached garages are not up to habitability code, housing code. So we end up knocking them down, and that's okay. They're still very affordable. So your job is to help your clients build or buy a house and build. We often use 2 to 3 loans in the process. If they're a buyer, they're going to purchase. We do a classic purchase, and then you are out of there. My team specializes in renovation and construction loans, so you do not have to have equity. We can use a renovation loan to build and finance 100% of construction. I have 3 buyers that are closing this week that are putting 5% down, 3% down, and we're going to add on the units as part of renovation loans. And then finally, when they're done, we're going to give them, and rates are down, we're going to give them a classic refinance. This loan, we have a lender fee of $1,540, but we waive these lender fees here and here. We make our money as a banker, we make our money on the capital markets, unlike brokers who make money on the fees on their clients. So this process, while complicated, makes a lot of sense because you're basically, multiplying the number of units onto your property. In practice, it looks like this, and particularly with buyers. Buyers, you want to have them go out and buy a house, preferably with an attached garage. Once the purchase is done, you're going to move on to phase 2, where you're going to build and remodel. You're going to treat this as a garage conversion, and then you're going to build one big ADU in the back. This is if you don't have equity. If you have equity, you can build whatever you want. But my loan guidelines, mortgage guidelines, Fannie Mae dominated, do not allow multiple ADUs, even though the state of California allows up to 4 ADUs. So what I'm going to do is through the loan process, we're going to do a room conversion here. We're not going to rezone it, and we're going to do a big ADU in the back. Now we're going to close on that, get the certificate of occupancy, and my loan people go home. Phase 3, we're going to, like I said, permit that, and the lender, the appraisers go home, so we're all set. Now you can do whatever you want. We're going to go back. We're going to re-permit this as a junior ADU, and we're going to split this in half. Sometimes, by the way, it's split horizontally. So you have a unit on the bottom and unit on the top, and now you have an SB9 unit and an ADU back here. So now you can rent these things, but particularly if it's a family compound or other things, it might be cheaper and easier to sell it because mom and dad they sell that unit, and that becomes their retirement nest egg. So lots of cool things. The timeline on this is very collaborative. We are here and interest rates are high. But over time, Fannie Mae is projecting that will go down to 4.3%. But my job is to get your clients through the whole process. But for you do loan approval and purchase. Boom, you get commission and you're done. When they're done with construction, you now have 3 listings that you may now sell. So by helping clients build ADUs this year, in a year, you may have 3 listings to sell. We work these numbers up in advance. This won't make sense to you right now, but basically this is your current mortgage. This is the cost during the renovation phase, and then the final refinance, if in this case, if you're doing rent, but ultimately we'll work through cash flow projects too. For buyers, the key areas is the sweet spot. These are best done within conventional conforming loan limits. And what we kind of do is work backwards. So if my client is in San Diego and the loan limit's $9,777,500, and that's what their approved amount, we're going to actually have them buy at a lower price. And then this is my loan amount. I'm going to subtract this loan amount from the total approved amount and the county loan limit. And this is what I have for construction. I do the same type of math project for existing homeowners where we'll do a renovation refinance or a HELOC. A lot of times a HELOC to build those units and go for it. You do not need equity and you do not need to refinance. When we don't have equity, this is the difference between renovation and construction lending and what we specialize in. We focus on renovation and construction is different because it's literally focused on the future appraised value. We send the appraiser out with the architectural plan, the contractor bid, and the floor plan, and the appraiser says, oh, I see what you're going to do with that garage. When you're done and you've got this little ADU, it will be worth a lot more. Now, let's say that this house is worth $700,000 and the appraiser gives us a lowball value of $800,000. Hold that thought on why he would give a lowball value. Based on current value, we can do a HELOC up to 95% of current value, but for new buyers, that might not give us the cash available. But with the future value, we can lend up to 125% of future value, even if we get a lowball appraisal. And that gives us the cash we need to build those 4 units. Now, why would an appraiser give an $800,000 value, 50% of an ADU project at least? And the answer is because, again, the mortgage guidelines have not caught up with the permit guidelines. I have seen appraisers give a $0 value to a 3-bedroom, 1,200 square foot ADU. And that's because Fannie Mae's appraisal guidelines say explicitly, appraisers, you cannot factor in the square footage of the ADU into gross living space. It's very vague and ambiguous. When this started happening several years ago, I partnered with the Appraisal Institute, and to my knowledge, we're the only bank out there with trained appraisers giving full value. Let me give you an example. My investors in Burbank bought a house for $1.3 million. They added a $200,000 ADU. An average appraiser gave it a value of 1.4, 50% of the value of the ADU. My appraiser gave it a value of 1.9 because he looked at the incredible rental income and the marketability of the house in terms of what would future buyers pay for to get this kind of rental income. Oftentimes with renovation lending, we have construction oversight. That's not your problem. I deal with that, and it's my job to do that as smoothly as possible. While we're at it, while we're building ADUs, we're going to do renovations on the primary home, any deferred maintenance. So again, we're not asking for repairs at purchase. We can add solar, we can replace roof, aging in place, all kinds of, even adding a pool, all kinds of different things. We also have loans for construction bridge loans for professional investors. These are the same types of loans that my fix and flippers use, but often at better rates than hard money. New investors are welcome. So if you have a first-time starter investor, don't worry, I can help them. This is an example of a perfect single family house, and you may see neighborhoods full of them. This bump out garage is probably full of hoarded junk. Why not clear out the junk, even sell it, and turn this into a studio or 1-bedroom ADU? An ADU amateur would slap up a door here and it would be really awkward in the morning, and that's why homeowners don't want to do that. An ADU professional would put a door here, or better yet, over here, create a little garden space. If you design these ADUs right, Homeowners should really never see their renter. They still have privacy. They're still living in their own home. And then there's plenty of space in the backyard to build a 2-unit back there, even a 2-story unit. On duplexes, these are able for multifamily properties as well, and I want to keep that unit aware of that. A duplex can have up to 2 ADUs. Beyond that, every 2 multifamily units, generally speaking, can have 1 ADU in addition to that. The exception is the city of San Diego, which has an ADU bonus program. It's a little more complicated, but essentially it allows unlimited ADU on a single family zone property and others. So what do you want to do to target listings? Number one, go to the older neighborhoods. Go talk to people who own their home in full, retirees living on $2,000 a month of Social Security income and have no other retirement savings. These are perfect people to add ADUs in the back and get them some rental income and get your listings done. Imagine if this unit in San Diego, for example, or LA, I could see this little 1-bedroom unit selling exactly like a condo, maybe $300,000, $400,000. These units could easily sell, 600, 700,000. That's fantastic retirement income for the homeowner, but it's also a great new pipeline of starter family homes. So this is really exciting. You also want to talk to home buyers and their families. Oftentimes, first-time home buyers aren't qualified on their own, but when they add mom and dad, and the possibility of creating a whole family compound where the adult kids live here with the little kids, and grandma and grandpa live back here, and maybe crazy Uncle Ed lives here, and so on, you have a wonderful family compound that they can build these units and sell them off to other family members, and you can handle that transaction. So next step is let's start planning our strategy. You can start to see what the possibilities are. That is my calendar. I have marketing tools that you can patch the neighborhood with, talking about it on nextdoor.com and others, but start building now because you don't want other realtors to take over that listing business next year when this becomes apparent. So look forward to working with you.